Hey guys, welcome back. I hope you had a really great day trading today. So today was Tuesday, August 20th, and we did close red across the board. And before today, we did have 8 green days in a row. So a red day was statistically likely, and we did open SPY down actually. And then that first move was a push up to get to the first resistance level, which is this down gap, and I have to zoom out just a little bit to show where that goes. It is this island top gap right here. So right off of all-time highs, we made these all-time highs on July 16th. Right after that, we gapped down and we pushed into that gap just a little bit and we got pushed back out. And after we got pushed back out, we did drop into the bottom of the implied move. And you could see that today's implied move was really small. It was 0.52%. And we did stay completely in it. So we did drop. We stayed above the 35 EMA, which has defined this gamma squeeze that we did get once we got above the 35 EMA right here. It has been a pretty strong support. And in SPX, we can see that we did open and get right up to that gap, but we didn't actually get into that gap. It was rejected right away just underneath, and then we also dropped into the bottom of the implied move. It was a really small implied move over here too, just 0.45%, and we did stay completely in it. And again here, we did close above the 35 EMA. SPY did close down 0.16%, SPX closed down 0.2%, VIX popped 8.26%, and in both we did stay completely within the implied move. So overall in SPY and SPX, very uneventful day. This level is showing signs of resistance. It is our last level of resistance, and if there are any bears hiding anywhere, it would be in this gap. So right here, just off of all-time highs. And I did also want to draw attention again to volume. Volume was very low today, 33 million. And honestly, that kind of volume resembles the kind of volume you might see on a half day before a holiday or something. It was very minimal participation. And then switching it over to QQQ, we did open in the same way here. We did open down, but then we popped up into the green and we got pushed back down just underneath this first resistance level, which goes back to right here. That was July 23rd, and we did get pushed back into the red, and we did close down 0.21%. VXN closed up 5.92%, and here we also did stay completely within the implied move. And the implied move here was just 0.78%, and we managed to close within that. IWM did open with a drop, and we dropped right into the Monday up gap and ended up filling that level. And we dropped underneath the 1 hour 200 moving average, and then we got right down to this 35 EMA, and we traded sideways along that, and we did actually close underneath the 35 EMA. And the bottom of the implied move was at 213. We actually closed underneath that, so 212.69 is where we closed. And even though we did close underneath the implied move, if you did sell this spread right here, 213, 212, then it would not have been 100%, but you may have closed with up 25% or 35, something like that. So IWM did not close within the implied move here. So IWM taking the biggest drop of the day, 1.17%. RVX, the Russell Volatility Index, did close up 7.19%. And here we did not close within the implied move. We closed just underneath it. And then DIA. DIA did trade really flat today, and on Monday we did gap up, and then we had 3 bars of upward momentum, and since then we have been trading sideways. So today we did close down 0.13%. We did close above that up gap from Monday and above the 35 EMA. And so far on the week, we are well within the implied move that was set out from options in the beginning of the week, so over the weekend. And maybe one of these days I'll make a quick video on how to set up this implied move. And ideally you want to set this up and get into these spreads the Friday before. It gives you the most amount of theta burn. It gets you the furthest out while still collecting a decent premium. So DIA did close pretty flat, down 0.13%. And we clearly stayed within the trading range today, the 30-day average volatility. And right now we are still within the implied move here for the week. And tomorrow is Wednesday, and we do have the Fed FOMC minutes from July's FOMC. That is at 2 p.m. tomorrow. Thursday, we do have our regular pre-market initial jobless claims, and on Friday we have Jerome Powell at Jackson Hole. So we do have a bit of economic data coming into the next 3 days, and clearly the market is waiting for direction from that before we make our next move after this insane past few days that we've had. So that was a recap of today. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you get notified every time I post a new video. Leave me a comment if you have any questions. I love hearing from you guys, and this is complicated stuff. If you're not understanding it, or if you need me to explain something in a different way, then just leave me a comment. And if I helped you to take a really great trade, or you learned something new this week, don't forget about that thank you button. It's a really easy way to say thank you, and it helps support my channel so that I can bring you more content. Alright, and tonight's video is going to be a little bit faster paced because I do have to be up at 5 a.m. and right now it's almost 1 a.m. so I do want to get a little bit of sleep, but I also don't want to leave you guys hanging. So I'm just going to go over the basic levels in tomorrow's trading ranges, and if you've been watching the past few days, everything's going to sound really familiar and you should know where everything is. And in SPY, tomorrow's implied move is between 554 and 563. That is from options. The 30-day average volatility is a little bit wider, 548 to 569. So the implied move is 0.65% implied, and then 1.81% is the 30-day average volatility. And then on Thursday's contract, the implied move is between 553 and 564, and to the upside we have this island top gap right here, and that is off of all-time highs. We did see this up gap right here, then we pushed to make all-time highs, and then we gapped down underneath that gap. So right here, battle zone, and the bottom of that gap is right where we got pushed out today, and that is just under 561. And then at the top of the implied move, we do have that up gap, and then the top of that down gap is right at all-time highs, and that is just outside of the implied move for the next 2 days. Tomorrow's top of the implied move, 563 and 564 on Thursday's contract. And this dashed line right here, that is where we do have the actual all-time highs, 565.16, and that is in our trading range for tomorrow. And then underneath us, we do have the 35 EMA. That 35 EMA definitely needs to be on your chart. You could see how important that level was this entire rally. Once we got above it, it did act as a very clear support level. So if we do open down, we need to be watching that level very carefully. And then underneath that, 554 is the bottom of the implied move. 553 is the bottom of the implied move on Thursday's contract. Underneath our trading range for tomorrow, we do have that 50-day moving average, the 1 hour 200 moving average, and this up gap that we saw from consumer spending last Thursday. So overall, not a very difficult trading range. And then taking it over to SPX, the implied move over here is between 55.60 and 56.30, and that is from options. The 30-day average volatility much wider, 54.95 to 5,700. On Thursday's contract, 55.45 to 56.45. And to the upside, we do have that island gap right here. We got rejected just right at that level. So that was at 56.20. Then we have that up gap right here. And then the top of that gap is basically right at all-time highs. And if there's any bears hiding anywhere, it would be right in this gap right here. And then to the downside, we have that 35 EMA. It's cutting right through the bottom of the implied move and clear support for this entire rally. Once we got above it, you could see right here, we were just constantly finding support. And then when we gapped up, we traded pretty high above that level. But as long as we keep finding support on that 35 EMA, we're going to keep squeezing, and if we bounce, we might just find enough momentum to get into this gap and get near all-time highs again. So 35 EMA is very important. If we do lose that level, the bottom of the implied move for tomorrow is 55.60. On Thursday's contract, 55.45. And then again, we have this 50-day moving average down here underneath the trading range, and the 1 hour 200 moving average. And just remember that 1 hour is still pointing down, and this 30-minute 200 moving average, even though it is pointing up, it's in a bearish configuration with the 1 hour. To be bullish, the smaller time frames need to be trading above the bigger time frames. So this is in reverse, and the 50-day moving average is also the 2 hour 200 moving average. Those are the same level, and that is completely in reverse. So we have the 2 hour above the 1 hour above the 30-minute. That is bearish, and it could definitely pull price back into down here until we can straighten those moving averages out. And then taking it over to QQQ, we do have an implied move over here between 475 and 485, so $10 implied move. And that is also 0.92%, and the 30-day average volatility between 468 and 493. On Thursday's contract, 474 to 487, and to the upside, we do have this level right here. That was one of the resistances we saw on the way down. We swung down, swung up after hitting this support level, and we saw resistance right here. The next day we gapped under the support that we bounced up. So that is right here, and that is 484, just under the top of the implied move, which is at 485. And then 487 is the top of the implied move on Thursday's contract. Yesterday I had mentioned that maybe while there is such a big disconnect between the implied move and the 30-day average volatility, it might be a good practice to find a strike that is right in between those two. So the midpoint between that looks like 488. So if we do find ourselves near the top of the implied move and you want to sell spreads, maybe look a little bit higher to 488. And then at the very top of the trading range, we do have another down gap. And this is just a little bit off of those all-time highs. We dropped, and then we did see a down gap, and we did see that bearish cross on this time frame within that gap. So that gap is the bottom of that gap, 488, kind of matches up with that midpoint. And then the top of that gap is at 496. And that's a pretty decent sized gap. And I'd say that in QQQ, if bears are hiding anywhere in this chart, it would be in this gap right here. So that is the upside, and then to the downside, we have that 35 EMA right here. It is not underneath our trading range, with which yesterday we had the 35 EMA underneath a lot of our trading ranges. Tomorrow, it's right here just underneath us, so it's going to be a very important level to watch if we do drop. Because if we do find support on that level, we might take another swing and maybe knock out this next resistance level. But if we break it, look down to 475, and at that level, we have the 50-day moving average. It's a little bit hard to see on this chart because there's a lot going on right here. We do also have that previous support turned resistance, which we are back above, and that is right here at 474. So that level plus that 50-day moving average could offer some support if we drop. 474 is also the bottom of the implied move on Thursday's contract. And then this is the thing that I am watching. This 1 hour 200 moving average is still pointing down, and these moving averages are momentum indicators. And that downward momentum on this time frame absolutely could pull us down. And then this gap just outside of the trading range, that is from last week, Wednesday going into Thursday. And this was the consumer credit report that gapped us up after inflation data. We had PPI, CPI, and then consumer credit. So again, not a very difficult trading range in QQQ, but definitely a decent amount of levels to know at least where they are. So if we pop up, where can we see resistance? If we drop, where can we find support? And then IWM, the implied move over here is between 210 and 216. That is from options. 30-day average volatility 206 to 219. On Thursday's contract, the implied move is between 209 and 217. And to the upside, we do have the 1 hour 200 moving average. The 1 hour has been showing signs of resistance. We did see resistance here last Friday. And then today we did get above it, but we did get pulled underneath it again. Actually, this was Monday, and then today we dropped back underneath it. So 1 hour 200 moving average, and then just above that, 216 is the top of the implied move. And then this down gap right here, this is that down gap from right before that big drop right here. And actually both days were pretty big drops, but that was the island top where we saw this up gap and then a second up gap. But then when we came back down, when we gave it all back, we gapped underneath those gaps, and we did have an island top here. We did fill the first two bull gaps, and we got up into that gap, almost closed it out, but did not. We have about a 0.5% gap left right here, and it's basically right at the top of the implied move, and then the top of that gap is at the top of Thursday's implied move. So these spreads right here actually look pretty attractive to me. 216, 217 on IWM. I don't know what that translates into in a rut, but that looks like it would be a pretty decent setup. So if we pop up, get up to that 1 hour 200 moving average, I would be looking to maybe throw some spreads on up here. And then to the downside, we do have that 211 level right here. And that is, if we look on the 5-year chart, the support that we saw in 2021 right here, which turned resistance when we dropped underneath and then saw resistance here in 2022. We've been trading underneath that level for a few years now. This past March, we saw it as resistance. Then just recently, we saw that rally, got above it, but we are back near that level. I think we're still above it slightly, but just barely. So 211 is within the implied move tomorrow. Definitely need to know about that level. Bottom of the implied move is at 210, and we have the 30-minute 200 moving average. See that momentum is facing down, and it definitely can bring the price down. You can see today it already did bring that price down. So I wouldn't be surprised if we tap that 30-minute 200 moving average, and then just be aware of whether it's showing signs of support or resistance. We have that 50-day moving average just underneath it as well right here. Bottom of the implied move is 210 and 209 on Thursday's contract. And then we also have the 4-hour 200 moving average underneath all of that. And the momentum there is still pretty flat. And just because the momentum is flat, that could pull us lower as well until we can actually turn it And the bigger the time frame, the stronger the pull of whatever direction that momentum is facing. So if we're seeing flat on the 4-hour time frame, we could be trading sideways and choppy for a little while until we can get that turn. And then switching over to DIA. The implied move for the week was between 400 and 413. That was from over the weekend based on where we closed on Friday. And then the implied move for tomorrow is between 403 to 413. Honestly, a pretty easy trading range here for tomorrow. Momentum has shifted down, but if we find ourselves trading upwards, the only level in tomorrow's trading range is going to be this resistance right here, and that is at 412. And that's just underneath the top of the implied move for the week. We have been trading sideways so far. We had 3 up candles, and then we've been consolidating here back to the 35 EMA. So we need to see if this 35 EMA can act as support, because if we can get one more bounce, then we might try and take out this resistance right here. But if not, if we can't get that momentum, then look down. The next level to fill is this gap that we started the week with. And the bottom of that is at 406.63. And then the bottom of the implied move is at 403. And towards the bottom of the trading range, we have the 1-hour 200 moving average, the 30-minute, and the 50-day moving average. Momentum there is facing up, but it is quite sideways. I do personally think that we will find ourselves in this level right here. That is not from the technicals. It is my opinion, but definitely don't trade based on my opinion. See what the chart is doing. If we do lose this 35 EMA right here, then look down and just be aware of all the levels that are right here. We do have that 50-day moving average. That is a really huge level. And again here, the moving averages are not in order to actually be bullish. We have the 1-hour 200 moving average trading above the 30-minute, and that makes this 50-day moving average our next true support level. So there you have it, guys. A lot to look for, a lot to know about, but overall the trading ranges aren't too difficult for tomorrow. And hopefully I covered everything. I'm gonna wrap this up, get some rest, and have fun, trade safe. Make sure you take profits when you're out, and I'll see you guys